All right, ladies and gentlemen, good evening, good morning, good afternoon, from wherever you are joining from. It's a rich man's world, as Abba has just sang to us. Today, the drive session we are having is a bit different because we are having our guest speakers in our midst tonight who are going to be talking to us about, we started this series about the road to wealth, and this is the fourth stream of that series. And today we are going to be having fund managers, investment experts coming to talk to us about how do we continue to plot our way or our journey to wealth. I would like to invite Mr. Evans. I don't know who your colleague is here. Mr. Evans from ARM Investment if you are here, let's see your face. And then I will let Mary should help us to read the profile. We'll start shortly because we are talking about money here. And as we say, time is money. So we need to also respect one another's time by starting early enough. So, Mary, if you have the profile of our speakers today, please, do you mind reading them to us, or whoever has been assigned to do that among the interns? Mary, are you here? Okay, I hope he's not at the other side trying to maybe mobilize attendance. Mary, can you hear me? Okay. Welcome, Mr. Evans. You want to just briefly tell us about yourself while we wait for Mary to get her audio, and then she can maybe read the profile before we now start officially.
All right. Thank you very much.
Yeah.
Let me just do a brief intro. First off, let me use this opportunity to thank the organizers of this event for giving us this platform. Just like you rightly said, it is an investment seminar, and it is going to be knowledge-packed full, as we are going to learn a lot during this financial planning seminar, more or less a financial literacy campaign. So without wasting our time, my name is Evans Lucky Otin, and I'm here with my colleague, Adenuga Kehinde Charles from ARM. ARM, we are one of the biggest non-banking financial institutions. We have over 9 subsidiaries ranging from the ARM investment to the ARM real estate. ARM have this goal of we want to be with our clients and everyone from cradle to retirement age. So at every point, if you're looking at the pension, we have ARM there. If you're looking at the investment, we have ARM there. If you're looking at the real estate sector, ARM is there. So we are just we just want to be with our clients. So at this stage, let me invite my colleague, Kehinde Ashenuga, for a brief insight.
Is Kehinde here? I don't know if it's a he or a she.
It's a he. He's on the call.
Okay. Maybe he can unmute himself.
Hi, good evening. Good evening, everyone.
Yeah, good evening.
Thank you, Lucky, for the intro. Thank you, Thrivers Academy, for this opportunity to be with you on your seminar this evening. As mentioned, my name is Kehinde Ashenuga. I would be driving us on this seat for a couple of minutes. I'll try and keep it as simple as possible so that it doesn't go too complex for all of us. It's nothing really serious. It's just our day-to-day lives. It is our investment and the way we spend our funds and live our day-to-day lives that we're talking about here. and we basically just want to educate us better on how to better achieve our financial goals and how to be financially independent. It's a step-to-step thing, and we hope that we can at least learn a couple of things from this. I don't want to call it seminar, but from this little get-together that we're having this evening. So I don't know if it's okay to start by. Is it okay to share my screen now? I go ahead.
Hold on, please. I need to grant you hosting right so that you can also be able to share your screen. Give me some seconds to fix that. But Mary, can you talk now? Hello, Mary. Okay.
Hello, sir.
Was calling you earlier. Can you help us? Can you read the profile to us so that we see the people that we are? Will people get to know who they are about to listen to? You have the profiles, don't you?
Okay, sir.
Please, thank you.
Okay. Good day, everyone. We like to introduce the investment managers we have from ARM, and I'll be starting with Mr. Evans Lucky Otim, and he has been an investment manager with over 5 years of financial planning experience. He is also an expert in investment relationship management. Also, his colleague, Mr. Kendi Ashenuga, will also be present. He is also from the ARM Investments and is also a manager with over 8 years of financial planning experience. He's also an expert in investment relationship management. So those are the two profiles of the two investment managers we have here today. You're welcome, sirs.
Thank you very much, Mary. So over to you, Mr. Ashenuga.
Thank you very much, Mary. Thank you. Can I share my screen now?
Please, you can go ahead.
Okay, thank you. Give me a minute, please. Okay, so thank you once again for this opportunity. We are going to, so I just want to, okay, so this will be the short outline that will take us through this little ride that we're going on this evening. It's just basically financial planning literacy. So we're going to evaluate our situation and where we stand right now. We're going to discuss what is investment and what is investing, like they're two different things. We're going to talk about the budget rule, factors to consider when you want to make an investment decision, where to invest, the power of compound interest, and then we'll talk a little bit about ARM as an organization. My colleague Evans has already given us some insight into that, so we'll just dig in from there. So let's start by evaluating our situation. A lot of us, every one of us would have a knowledge of this because it is our situation that we are. So it is comparing our income that we can see on the top left corner of this box to our expenses, right? And then what do we put aside for investments and savings, and what are the debts that we service? So literally what we're saying is that as we are on a monthly basis, a lot of us are salary earners, some of us have businesses that we do. How much comes in and how much goes out on a monthly basis? Like the little thing that we call a budget, like do people still do budgets these days? It's advisable that you do that because you need to like compare your income and expenses and ensure that your expenses don't outweigh your income. It is very important. The difference between the income and expenses that you're able to save is what should go to your investments and savings. And when we say investments, by investments we mean things that you want to put your money into that will work for you, that you don't have fallow funds. That's what we mean by investment. But for savings are things that your money can easily, that there are funds that you put in places that you can easily have access to. That's why you put them in your savings or current account, so that you can use your ATMs and or whatnot just to have access to it. Then the debt. This fourth box is a place where a lot of us fall in without exactly realizing it, because we find out that we are living on borrowed expenses. We want to do something, we don't have enough money, we borrow to do it. By the time you are incurring more debts compared to your income, what you see is that you're always going to be in a negative position, which means that this box number 3 for savings and investment, you don't fall in that category at all. So we need to be very mindful of our current situation with this. So this is what I was talking about. If you look at this beam balance, you see that the weight of the expenses is more than the weight of the income. That's why you have these sides falling down and you have the other side going up, because as your income is increasing, as the weight of the expenses is increasing, it is pushing you down, and then the weight of the income is very light. You see everything that we spend the regular expenses on: housing, food, dependents, entertainment, loans, vacation, and all that. But look at the income. Income is coming from maybe some people employment and investment. Some have rental income that they get, some from businesses. A couple of us might have income that comes from 1 or 2 of these, or maybe more. But most people fall into the category of income from only employment. So we need to be very careful to ensure that we don't find ourselves in this bracket. So we're going to go into the nitty-gritty of it. What is investment and what's the investor? So if you look at this diagram that we're having here, we can just simply see that we don't need to have billions of naira before we start to put something aside to invest. This just shows you that the saying that goes, little drops of water make a mighty ocean. You can see that each rack of coins is growing by the day. They just didn't grow overnight, but they yielded into something eventually. So little drops of water make a mighty ocean. What is an investment? An investment is any assets, just funds and money literally that you put in a place expecting that it will generate returns for you. It's supposed to increase your returns, or increase the amount that you've invested in some way, or add value to you, not just lying fallow, like I said initially. The returns is what is your reward for owning an investment. So when you hear people talk about ROI, that's what we call return on investment. Return on investment is what you expect to get in return for actually doing that investment in the first place. So it's income on investment and increase in value of the investment. That's what we call an investment. So anything that you put your money into and you expect a return from is simply an investment. The purpose of your investment has to be clearly stated before you start the investment. By so saying, I mean that you can't just say, I'm putting money aside without knowing what you want to put money aside for. So it is important that you tie your investment to a goal. And when we talk about goals, we have short-term goals, we have medium-term goals, and we have long-term goals. So we need to ensure to know that this is the specific thing I want to do with this fund, such that whatever investment you are going into is supposed to drive you to achieve that goal. So what is the purpose of your investment? Do you want, is it to save tax? We have investments that will help you save tax. Do you want to fund a specific goal in the future, like I just said? Do you want to build a retirement fund? Is it to earn regular income? There has to be a purpose for you to be able to start an investment. So what is investing? This is investing. Investing is simply spelled out in this diagram. What you see here is committing money, committing time, committing energy for a future benefit. So anything like Mr. Babs said at the beginning of this presentation, time is money. So anything that takes your money and your time has to have a reward. Sorry, I'm having a bit of a delay for this thing to project. So for us to have a clearer understanding of what an investment is, we need to look at this thing that we call a budgeting rule. A budgeting rule strictly states that 50% of your earnings should go to your needs. But when we say needs are things that you cannot do without. We talk about rent, we talk about feeding, we talk about transportation to work, we talk about clothing. Those things are needs, they are not wants. 30% should go to wants and 20% should go to savings. So we call it the 50-30-20 budgeting rule. In our economy, because Nigerians were really very religious people, so they've added a 10 to it to make it 40-30-20-10. That 10 is your tithe. If you're a tithe paying person in church and all that, 10 goes to your tithe. But the actual budget rule is 50-30-20, which is 50 to your needs, 30 to your wants, and 20 to your savings. Now, it is important to say that I feel that when it comes to one, you should even be able to reduce it further, because I feel 30 is too much for your wants. You should be able to be disciplined enough to set things aside for yourself for the rainy days. You see, we are giving the least percentage to savings here, which is actually the most important thing. So it is important to pay yourself first every time that your salary or you earn an income. It is important to pay yourself first by saving, and then whatever you have left is what you spend. It is easier to maintain a disciplined approach to having an investment with this method. So what we're simply looking at here is looking at the salary band of somebody that earns 300,000, for example, the first row here. What it means is that the person is saving 60,000 naira on a monthly basis. 150,000 is going to be needed, which is understandable because, like I said, they are the most important things on a monthly basis. And then the wants take 90,000 naira out of the 300. This is just an assumed calculation. And what this means is that on an annual basis, if you are putting your money in an investment, for example, that returns 7%, what this simply means is that from the saving of 60,000 on a monthly basis, by the end of the year, in an investment that gives you like 7%, you would have saved about 747,000 thereabouts by the end of the year. This just simply explains what this diagram is about, so that you can just put an idea and put some figures for what we're talking about. So this just explains everything that I said. 50% goes to needs. These are things that must pay and are things that are necessary for survival. Like I said, rent, mortgage payments, car, groceries, insurance, health, minimum debt payments, utilities. These are the things that should be in your needs. Your wants are things that you spend money on that are not really essential. Like I said, includes having dinner dates, going out to movies, new handbags, sporting events. So you can see that these things are things that you can easily avoid. You don't need to attend or be at all of them at the same time. You can just do a priority list, reduce the amount of your wants, increase your savings, and then you get to your goal easier. Savings, so try to allocate 20% of your net income to your savings and investments. This includes adding money to emergency funds, in bank accounts, in RSAs, additional voluntary contributions and all that, just to ensure that you are driven to reach your goal and be more financially independent. So factors to consider when making an investment decision. So we find out that we're in an economy where a lot of people say, I want to buy shares. Then you further ask them, why do you want to buy shares? Maybe because my sister bought it, or I have a friend that bought shares and the shares are doing well. The question you fail to ask yourself is, what was the goal of that person for going for that investment? The fact that I am A and you are B, we both have financial goals, does not mean that our financial goals will be met in the same way. For Mr. A, my financial goal might be immediate, so it might be short term. For Mr. B, the financial goals might be long term. So you have to find the actual vehicle or the actual instrument to drive you towards reaching your financial goal. You cannot match a short-term need with a long-term goal. That would be like fixing a round peg in a square hole. It doesn't work that way. So you need to be sure of what your financial goals are before you then go into making an investment decision. And I would explain this further by saying, where do we invest? So you can invest in bonds, fixed income instruments, money market accounts, real estate, stocks, commodities, gold, mutual funds, arts and collectibles. All this arts and collectibles, gold and all that. I know, yeah, people think that they're really expensive and all that. Yes, so it doesn't matter what your goal is. The fact remains that just start with something small and you're able to grow it over time. That's why I said you need to match your goals to suit, you need to match the vehicle to suit the goals that you have. So here are the mutual fund offerings that we have that can serve people as low as 1,000 naira for you to start an investment. We have the money market fund. It's a mutual fund. And what is a mutual fund? A mutual fund is a pool of funds, like everybody, my money, your money, everybody on this platform's money. We have the same goal. You have like minds. Everybody wants a conservative investment, or you want something that is exposed to a little bit of equities. Once you have like minds and everybody puts funds together, it is called a mutual fund. So these are a few mutual fund offerings that you can consider to put your investments in. The first one is the money market fund. The money market fund, like you see, I won't really go into it so that I don't take too much of our time. But the money market fund is a capital preservative fund. What it means is that when you put your money into it, you cannot lose your capital. You will just continue to earn interest on a daily basis, and then it pays quarterly returns. The investment is more or less put into a combination of fixed deposits, treasury bills of 90 days, and then commercial papers from tier 1 banks. So with this kind of investments, you are sure that nothing will happen to your capital and that you can only earn interest. The problem is that the interest rate will not be fixed, but you are sure that nothing will happen to the money that you invested, and you are sure that you get some returns on it. The money market fund is something that can serve as an emergency fund. I'm sure you must have heard me say emergency funds like twice in this the course of this presentation. An emergency fund is something you want to set aside for the rainy day, such that within 24 hours, you can easily have access to it when the rainy day comes or when you have an emergency. So there are funds that you can easily fall back on. That is where the money market fund is. The fixed income fund is an investment that you can use for a medium to long-term goal. Same thing as the Eurobond fund. Both of them are actually the same thing. But the difference between the fixed income and the Eurobond is that the Eurobond is in USD, is in dollars, while the fixed income fund is in Naira. They are just a sort of investment that are majorly lumped into corporate and sovereign bonds. They are to suit long-term investments, but they do not offer you capital preservation. They pay dividends annually, not like the money market fund that pays quarterly. So if you have a long-term goal, medium to long-term goal, so in the investment world, any investment that is less than a year or maximum 1 year is termed as short-term. Anything from up 2 years to 5 years is medium-term. 5 years and above is long-term. So the fixed income fund and the Eurobond fund can serve either your medium or long-term goals. The third one here is the short-term bond fund. It's also an opportunity for you to partake in buying bonds. You know that the minimum entry level for bonds is about 5 million and above, depending on the bonds that you're buying. But with the short-term bond fund, you can have 5,000, you can participate in a bond as well. Like I said, this also does not guarantee you returns, but on the long term, based on return on investment on an annually basis, you can tie this to a long term or medium term goal because you eventually make the best out of it. I would digress a little bit here and relate this investment to when you hear our parents say that you want to buy shares, that they bought a lot of shares. A lot of people made money from shares. So all these investments that I'm terming long term are just something equivalent to that, to say that, you know what, you are buying it at a lower price now, but over time on the long term, you will make enough returns on it. The Discovery Balance Fund is the next mutual fund that you can look at for the medium term. It's a medium risk investment. It's balanced in the sense that you have a little bit of exposure to equities and then you have a little bit of exposure to fixed income instruments. So the volatility is not as high as the previously mentioned ones, except the money market fund that offers you preservation. So it's a medium risk investment that you can tie to your medium term goal, say 2 to 5 years. The ethical fund and the aggressive growth fund are full blast high risk investments. And this is because they have full-time exposure to volatility in the stock market space. So what this means is that your capital is not guaranteed. And it also means that you get dividend annually, provided that the fund has made a profit margin in that reporting, that financial year. The difference between the two funds is that where both of them are full blast into the stock market, the ethical fund is more conservative in approach. What do I mean by that? What I mean is that the ethical fund is a religious kind of investment. So let me just use the word Sharia compliance, so that might be a little bit explanatory. So what we mean is that there are selected stocks that you're able to invest in the ethical fund. What it means is that for Islam, for example, you're not allowed to invest in alcohol, invest in hospitality to some extent, invest in pork business and all those kinds of stuff. So there are selected stocks that are invested in the ethical fund. But for the aggressive growth fund, you're allowed to play in whatever market that you want to go to. So if you are those that have strong religious beliefs and you feel like I don't want returns of my investments to come from an open kind of stock market, the ethical fund is one that will suit your financial goals. But both of them, like I said, are high risk and then they are long-term investments. So we naturally advise people that want to start investing for their kids, like when you have you want to gift somebody an investment, like you have a newborn child and all those kinds of stuff, all those funds that they give to kids and children, you want them to have access to them maybe when they are older, much older, like 18 years old and above. So you have like an 18-year plan to achieve handing over of this investment to your kids, the ethical fund and the aggressive growth fund, as well as the Discovery Balance Fund, will be a good one for you to be looking at. Here, we are just going to take it simple and talk about the power of compound interest. And this is just a figurative expression to show you what we're talking about, the coins that were stacked initially in my slide number 4 or 5. So if you start with as low as 2,000 naira an investment, let's use the money market fund as an example because that's the conservative one. If you start it as low as 2,000 naira and continue with a monthly deposit of 2,000 naira at an assumed rate of, let's say, 8% for 5 years, what would have contributed is 122,000, and the interest amount would have been 28,000. How did you achieve this? You didn't achieve it because of you putting 2,000 in one place. No, you achieved it because the power of compounding interest has helped you multiply the interest on the amount that you have been investing. And how do you easily compound this? All you need to do is put your money in an investment that will continue to yield for you, and then ensure that you are disciplined enough to continue a steady additional to that investment on a monthly basis. Sometimes it could be weekly. When you have, there are a lot of apps these days that people, a lot of financial managers have a lot of apps these days that you can easily set up daily plans or weekly plans for you to be debited, and your investment is credited just to earn more returns. So you could do something like that, and that's what we call direct debit. With a direct debit, it just means you are giving your bank an instruction to say that on a particular date, debit my bank account, you guys, and credit my investment with XYZ, just to ensure that you are disciplined and steady enough to reach that your financial goal. So for those of us who, if we look, I know that a lot of us will probably feel that maybe 28,000 is too small to as a return in 5 years. Yes. We look at the amount that we're talking about is 2,000. If you further go down and look at somebody that is doing 200,000 on a monthly basis, that's a total principal of 12,200,000 in 5 years. And the person must have made an excess of about 2.8 million in that same period. So it's just you looking at your situation and saying, I have little to invest. No, that's not correct. You can start with as low as 1,000 naira today. And as you improve, or as your financial situation improves, you can begin to increase what you are putting aside as a contribution towards reaching your financial goal. It is never too late to start, and there's never money that is too little to start with. Oh, let me get you again. Sorry. Who we are, I'll briefly just talk about ARM here, but before we talk about ARM, I would like to elaborate a bit more on this compound interest and the direct debits. So people would say that the reason they don't really want to go into an investment is because maybe it's they don't have an idea. One, you don't need to have an idea. So maybe because they are scared of other experiences of people that have lost funds. Yes, that's a valid point. Or 3, because they feel like they don't have enough. So I'm going to address those 3. 1, you don't have an idea. You don't have an idea of what to invest in. That's why we are here. That's why you have financial managers everywhere. Just approach a financial investment company and talk to them. Tell them your goals. Tell them your levels. Tell them your financial standards, your income, your expenses. Somebody will sit down and talk to you, walk you around it and tell you, okay, you know what? You can start with this for now, and then we can continue to reevaluate. Every evaluation is one key thing. There are 2 basic things in investment. 1 is discipline. Number 2 is reevaluation. You need to continue to reevaluate yourself. You can't be earning 400,000 and be saving 50,000 completely. When your earnings go to 600,000, you should be able to increase what you're saving as well. That's where the discipline comes. For those of us that are not really too disciplined, setting up a direct debit such that you don't even see the funds at all. Like most of us, we address them to say, you know what, if you know your salary comes in on the 24th, for example, set your mandate for the 24th so that as the money hits your account, it's immediately debited and you don't have access to it. That helps you. For those who feel like I don't have enough, we can never have enough. If we actually look at the real scheme of things, looking at the Nigeria of today or the way the economy is going, there's nothing like enough. But you just need to discipline yourself to ensure that as low as 1,000 naira will get you somewhere. And I always make this evaluation to say, me, for example, if somebody comes to me and says, I need 100,000 naira, the next question I ask you is, okay, out of this 100,000 naira, how much have you saved out of it? How much do you have out of it? It makes more sense when I hear that, okay, I have 40,000. and then you know that what the person is looking for is 60,000. That person has 40,000 because he or she has devotedly put something aside to reach a financial goal. But there's a shortcoming somewhere along the line and the person needs support. It is better, it is easier to support somebody like that than to support somebody that says, I have zero and I've not tried to do anything at all. So it's one way to look at it. Number three was people are scared of other people's experiences. Yes, you have a lot of scams going on these days. You have a lot of people coming out to say we're into financials and all that. And then at the end of the day, you put your money there and the money is gone. It's a valid point. But this is why you have regulators like SEC, like PENCOM, like there's a lot of regulators. So just ensure that before you go into an investment, you actually do a research on these organizations to know if they're actually genuine or not. You have to put in an effort as well to ensure that you are not scammed. Otherwise, people bring out ridiculous rates these days and they tell you that this is what you're going to get. But because of the rates and the returns, then we go for them and eventually our hands get burnt. So we need to check and double check to ensure that whatever investment we are going to is actually genuine and valid. So I'll just go to a little overview of who we are. We are ARM. We've been around for at least 29 years now. The major business that you know about ARM is the pension business, which is a forerunner before the investment managers came into space. We are driven by a vision for the future, and then our goal actually and our joy is to ensure that we transform the goals of our clients to reality. So this is a brief overview of ARM. Like my colleague Evans already said, ARM is an holding company. We have the traditional asset management aspect of the company, which is pensions, investments, securities, and trustees. Then we have the fund business, which is our infrastructure space, which is Harriet, infrastructure managers. We have an agreed business, and we have capital partners. And then we have Mixta. Mixta is a real estate arm of ARM. So we're into building and all that. And we are majorly focused on the Lekki Epe axis of Lagos State. And then we have a few projects outside Lagos State in Benin and in Abuja as well. We manage over 1.4 trillion naira of funds under asset management. Our fund rating is A&A by Augusto as of the last rating of 2022. We have over 993,000 clients group-wide, and we have like a staff base of about 700 at the moment. When I was talking about checking to be scammed, companies like Augusto and Co are places you can go to actually check the ratings of these companies before you go into investments with them. They also help because they are big in the financial space. So this will help you to know and to be able to track the genuinity of the fund managers and the people that you want to place your funds with. So I'll take a break from here and see if we have any questions that you want me to address or further explain some things. Thank you for listening to me. Thank you for your attention.
Thank you very much, Kehinde, for that very succinct and very detailed presentation. Thank you. Does anybody have questions for our guest speaker this afternoon? Do you have any question for him? I'm sure quite a lot of us are taking notes. Questions, please. Questions from the audience. Okay, while we're waiting for maybe those that have questions to try and gather the thoughts together, I have, I want you to, because I said, I told your colleague that, okay, we'll have mostly population of, youth, people who are just considering the idea of investment, of building their own portfolio for the first time. What do you advise? Okay, I mean, I know you've given us like a couple of options that they can consider, those that are short, that are medium, and then long-term ones. So what will you advise? Okay, my earning, maybe I'm earning 20,000 naira a month, and I want to start thinking seriously about investment. I mean, what will you advise? Which of the products or which investment portfolio would you advise them to go for?
Okay, thank you very much for that question. So for people who are starters, you earn little. There's supposed to be a minimum exposure to risk. There's something we call risk appetite. When you earn little and you just want to start an investment, it is better to have a conservative approach to such investments. So I would advise that out of all these products, the money market fund, which I said offers you capital preservation, will be the best option. And why? The reason is because if you start with a bad experience, and when I say bad experience, for example, if you start with a fund that is volatile, so you put in your 20,000, for example, like you mentioned, and then 2 days after, you log into your app to see what my 20,000 has yielded, and you see 18,000. That person is discouraged, and the person begins to panic to say, what sort of bad investment did I make? So it is important for you to learn on the kind of investment that you want to delve into. And then as you grow, you can then try to then have other investments to match. It's a portfolio, like you said. So you don't need to just stick to one investment. You can start with one and then begin to deviate into others as the portfolio grows. But my candid advice is start with a conservative approach, start with the money market fund, something that won't overtask you. A lot of people overburden themselves. So somebody earns 20,000, I'm pay 15,000. How's that possible? You need to save and be convenient with what you're saving. Don't just try to overburden yourself to reach a target that is unrealistic. So it is important that you put this at the back of your mind and then just put in the little savings in the money market fund. With as low as 1,000 naira. You know that I'm putting something aside. It could be more, but I'm just saying conveniently put your money in an investment that offers you capital preservation. The best advice, put it in the money market fund.
Okay. Thank you very much for that. The best advice is to put your money and to start in the conservative way, put your fund in the conservative fund, which is the money market. I think somebody is asking a question that, are you guys in Akure? I think that was Shalala, I believe. So do you have an office in Akure?
Yes, we have. So ARM is present in almost every state. Our offices are just with the pension offices in your location. The Akure office is a UBA branch. I can share the information with you so that I can drop the information in the chat box so that you can see it. I'll put the address there for you. But yes, we're in Akure.
Okay. While we are still waiting for maybe more questions to come, I also have a question. Yeah, with the current inflation rate in Nigeria, how does that affect my, okay, let's say I have a money market fund, for instance, and now inflation rate in Nigeria is almost is out of the roof. How does it impact my investment portfolio? I don't want to say with ARM, but looking generally beyond ARM, I know there's also Stanbic IBTC that does the same thing that you guys do. How does the inflation rate impact my fund?
Thank you. That's another good question. So inflation affects everybody. It affects the prices of food, affects transportation, affects everything. The real way to look at it is where is my money? So for example, the value of money that you have at hand, or the value of money that you have in your savings or current account, is the money that is actually really affected by inflation. And why do I say this? I say this because let's assume that I have some money in an investment that is yielding me some kind of returns. I have a little bit of a cushion effect. What do I mean by this? So the money market fund average year to date is about 9.04%. Inflation rate is in double figures at about 20-something%. Even though the rates are not commensurate, like there's still a gap of about 13% thereabouts between the inflation rate and the returns you get from the money market fund. At least you know that you have a little bit of a cushion. There's a buffer somewhere compared to the money that is at hand that is not yielding anything for you. But of course, you have to have cash at hand anyways. So it's always advisable that despite your situation, look for an investment that matches that will give you a cushion effect to inflation is because of the value of the funds that we're talking about, that we're mentioning opportunities such as the money market fund. There are other investment vehicles that you could put your funds into that will help you buffer inflation as well. One, you can go, there's a lot of fixed investments or fixed opportunities these days that can offer you as high as between 15 and 17%. But of course, they require high capital investment. So when I say high, I mean some of them are a minimum of 5 million, some are a minimum of 10 million. But I'm just saying there are other opportunities out there that can help you. Other opportunities that we can even tap in from are things as simple as, I'm sure at some point in my slide, there was a place where we spoke about commodities and gold and all that. Those are also investments that would help you outperform inflation. For example, people that invested in rice in the year, I'm just trying to give an overview or an insight into something. People that invested in rice earlier in the year, at the amount rice was then, at about, I think a bag of rice was about 30,000 at the beginning of the year. Right now, a bag of rice is about double. People that invested in that business at the time will be making a lot of money now. And that's because that's over 200% return on investment. And inflation rate is about 22% right now. So of course, that kind of person has already outperformed inflation based on a decision that was made 10 months ago. So what I'm just saying in essence is that it depends on the kind of investments that you're putting your funds into that will then let you know the amount of buffer that you have in this period. But it is still better to always have a buffer, at least a little bit of a percentage of a buffer, than not having anyone at all. This is when you don't have at all that becomes a really big problem. But at least you know that Ibad, as you always say, something is coming in as returns from an investment that you have made.
Thank you very much. Another question I would like to ask is, I don't know if anybody has a question, please feel free to just raise your hand so that we can see you, because I'm only seeing the screen. I can't see everybody here. We talked about Eurobond, and that's also another very good opportunity for those who don't want to do Naira. Can somebody subscribe to that particular portfolio, paying Naira into a Eurobond account, or I must go and source dollar to be able to participate in it?
Thank you very much. For the Eurobond fund that we mentioned, it's a dollar investment. So the issue that we're going to have, you need to source the dollar yourself and bring it to us. Invariably, we have a couple of partners that we use to change funds. So we can, by way of relationship, do an introduction to you. Sorry, introduce you to them so that you can deal with them. They can credit us. What I'm saying invariably is you give them Naira, they pay us the dollar on your behalf, and then we invest for you. But it's a dollar investment because you're making your returns in dollars. We are paying you in dollars, so you have to pay us in dollars.
Okay. So I think that answers. So you would recommend or refer your customers or your clients to your own third parties who now credit you in dollars, or they credit the customer in dollars, and customer can now invest in the Euro fund. Okay.
Exactly.
Then you also mentioned something about property. Do you want to shed more light on that? How little or how much does somebody need? If they want to participate in that kind of, okay, I don't want to do fund, I don't want to do money, I want to invest in property. What are the options, and how little can one go to be part of that scheme?
Okay, thank you. For the properties, so they vary. They vary in the sense that, okay, so let me start by saying the investments with the highest returns will be properties, is real estate. If you look at it holistically, it's real estate, but it's a long-term investment. So you have people that will buy properties. For people that, let's take an example of a lot of people are not in Lagos. I don't want to mention in Lagos. I say a lot of people are not in Lagos on this course. I don't want to use in Lagos examples, but let's say there was a plot of land 10 years ago that was worth 1 million naira. That same plot of land today cannot be 1 million naira. So that is a good investment vehicle for a long-term investment. So if you see a plot of land is going cheap in a growing, developing area, it's an advisable investment to go into. Now, for the opportunities that we offer in the real estate space, we have properties that are buildings already built to Kakas, and then we have land as well that you can participate. It depends on what you want. The amounts range from, we have lands as little as 6 million in Towns Real Estate or Farah Park, and then we have some that go for as much as 275 million on Lakowe Golf Course. It depends on the approach that you want. Now, for those ones that go for as low as 6 or for all our properties anyways, we have payment options. You can start with a particular percentage and then have over the next 24 months or 18 months to pay up the balance at steady intervals. So we can work around whatever will suit you or suit your plan to ensure that you maximize investment in that space. Very recently, we also started like a program where you can like hire to own properties. I see that a lot of that is going on at the moment. So you can decide to say, okay, you know what, I want to partner with ARM on this project, and then I want to rent this for now. And instead of when you pay back, what you pay as rent is kind of like you paying a part of trying to own that property. At the end of the day, if you finish within the stipulated period and pay that off, then you can then decide whether I want to own the property or not, or I want to sell it off. So people use properties as speculative kind of investment, such that I can use the time money down now to get better returns later. So that's kind of the approach that we're looking at with trying to rent to own, which is a new initiative by Mixta, and I think this started about 2 months ago. So it's still very much active, but of course, terms and conditions would apply, and then there's a little bit of a rush into that space now. So availability of properties for that project is not much yet. But as time goes on, I'm sure that they will expand that space. But yes, we have land, we have buildings, depending on what you want. It's just an approach.
Thank you. But okay, you said, if I get to right, you said 6 million minimum to start that, or is there a payment plan? How much do I need? Do I need to, I must get 6 million? Or, I mean, I can start for as low as maybe a certain amount, maybe 20,000, maybe 50,000. You want to elaborate on that for the property? Because I know most Nigerians will think property and all that. I know quite a lot of our audience there might be thinking in that direction as well.
Yeah, thank you. So I didn't, maybe I wasn't quite clear. What I meant was that the total value of the land is 6 million. And then if you are going on a payment plan, which is between 6 and 7 million, because there's some extra figures behind it. But if you are going on a plan, you'd most likely, and what we do mostly is the initial payment, the initial deposit will be 25% of the whole amount. And then you can spread the remaining 75% consistently, whether you want it monthly or quarterly or biannually or annually. You decide whichever one is convenient for you, because we try to ensure that it is for the convenience of the client as well. So whichever option pays you is what you go for out of all the options available. But the initial deposit will be 25% of the whole amount, and the remaining 75% is spread over a particular term.
Okay, thank you. I'm thinking, okay, somebody asked, oh, your colleague has answered. Somebody is asking what is the minimum amount they can use to start the Eurobond. I think your colleague has answered. There's also another question. Okay, I think it's the same Eurobond. Okay, still talking Eurobond, because Nigerians now with the way the foreign exchange is going, I think everybody is thinking Forex. So another question I would like to ask is about, you also talked about, investing in stuff like gold. I mean, do you want to share more information on that? I mean, how do I go about that? Okay, I don't want to do one. I know gold, all this precious stuff are also very good avenue for investment or for just saving money. What are your offerings concerning that, and what are your advice if somebody wants to go? And I would like you to just go shoestring. What is the minimum amount I need to get into that kind of investment portfolio?
So that's a very good question, and it's a tricky one. So I'm trying to see how to go about it in the easiest way possible. So I'll go this route. firstly, we do not offer anything in the gold space.
Okay.
Firstly, it was just, I'm just giving different approaches to investment holistically that aside this, a lot of people don't want to go the money way. They don't want to go dollars. They don't want to go naira. They don't want to go mutual funds. They don't want to go savings. They just want to go into precious stones. So gold is one of them. Now, would you want to go into it personally? The answer is yes. And the reason is similar to the one that we spoke about, Bryce. I know of our mothers then used to really buy a lot of gold and all that. And a lot of people along the line, sisters and co have bought jewelry for us. I remember when they used to buy gold for about 8,000 naira per gram, 4,000 naira per gram, and all that. Going by inflation and everything that's going on in the economy now in the world as of today, 1 gram of gold is about, I think, is in excess of 50,000 for 1 gram of gold now. So imagine earlier in the year and at some point last year, I know that it was about 23,000 naira per gram. And right now, it's about 50-something thousand per gram. In essence, just like the rice case I mentioned initially, what it means is that the price has doubled over time in the space of 1 year. What does that say to you? That says to you that you have outperformed inflation if you have invested in that as of the time. So is it a good investment to go into? Yes, because the value never really depreciates. What happens is that if you're not going to buy at 50-something naira now, 50-something thousand naira now, you're storing value. You're storing value for a later date. It doesn't necessarily mean you want to sell off tomorrow. It's just you keeping your investment in a particular precious item. Now the next question is, I'm buying it. Do I want to wear them? Whether you wear it, whether you don't wear it, that's the good thing about gold for people that know about the gold business. Some people will wear the chains and use the jewelry and use everything, and when they want to sell it, it is still the same value. So what have you gained in essence? In essence, you have used that item, and you are still selling for a bigger amount. So it's a win-win situation for you. You can't go wrong with investing in precious items. It's an advisable investment, but the thing is, it's very cost. There's a high cost implication to it. So for those who can afford it, it's not bad. I'm sure you get rings, jewelry, bracelets, and stuff for 1 gram. If it's 1 gram, you can afford 50-something thousand. Why not buy it? Keep it. If you have money later to buy another 2 grams, buy it. If it's 1 gram, you want to be buying every quarter. Go ahead. On the long run, is for your own benefit. It's something you're going to benefit from eventually. So yes, it's very advisable. I'll advise anybody to do it. I personally try to do it once in a while, but it's a very good investment to go into.
Thank you very much for that, because really, jewelries or precious stones like gold, they never lose value. I mean, so if you are thinking property is too big, is too much, gold, diamonds, those are also very good investments that you can think in terms of shoestring. You have as little money, invest in it, and then over time, the value will always appreciate. And just like you said, you can use it at the same time, and then when you are ready to cash out, to sell it, you sell for a bigger amount than what you used to buy it. So for those of us who might not have been thinking in that direction, I think it's high time we started also looking there. Does anybody have any other question for our guest speaker today? Okay, in case any of our participants today want to reach out to you, they want to talk to you about, they want to start an investment portfolio, how can they reach you? How can they contact you? Do you want to also share?
Yeah, we're available. We're available 9 to 5, Mondays to Fridays. Our offices are in locations everywhere. Evans will share our contacts with you, and then we can drop it in the chat box so that if people have any questions, you can either reach out to us on our official numbers or send us emails. We'll drop our official numbers and our emails in the chat box so that we can be reached. I think Evans, please, as I'm speaking, please drop the official numbers and the emails there. So you can send us emails, you can call us. We're available to take your questions or advise you on how to go about being financially stable.
Okay, thank you. Okay, I'll also be dropping the link to the Thrive. I'm sure more details will also be shared in the Thrive group. If you are not in that WhatsApp group, please can just click on that link and then be part of the, because if there are other information, I'm sure we'll always share with members in that community first, as the case may be. So if there's no other question, I want to say thank you so much, Mr. Kende Shenuga, for availing us of your time. We've not seen the details to be shared by your colleagues, but in case you don't have it now, great. Okay, I think the number is there. Please, for those who want to talk to them beyond this session, you have the numbers there for you to call. I hope they're also on WhatsApp in case they are thinking saving airtime credit. I'm sure we will to also reach out to you. And then Mary, I mean, for those in the drive session, you can also reach out to Mary so that she can give you the details of our guest speakers today, and then you can take your discussion, further with them on how they can help you to maybe to set up how to start off your own investment portfolio right from where you are and guiding you to where you actually desire to be. I want to say thank you once again for coming and for sharing with us this evening. I'm sure everybody has learned one or two things. Even I have, learned a couple of things from the presentation. And financial literacy is not something that is a one-off. It's something we always need to. We have to invest in our financial literacy, as we invest in our mental literacy or our academic endeavor. So we need to always learn, relearn, unlearn certain things so that we can be where we desire to be financially. And I'm glad that we have experts from ARM coming to share with us tonight. Thank you so much once again. Thank you for everybody for coming today and for staying this long as we round up the session. So next month also we'll be having last Sunday of the month, we'll be having another session of Tribe. Hopefully we'll also come with another expert in the area of maybe wealth planning, wealth creation, or financial issues, and to come and also talk to us from their own perspective on what we can do to plot our way for our journey to wealth. So thank you, everyone. Have a fantastic remainder of the evening and a wonderful week ahead. From here, bye.
Thank you very much. Bye.